Welcome investors and traders. Today we'll discuss about Marubozu Candlestick in the series of technical analysis. So this is the first candlestick where we are going to deep dive. As discussed in last session, we will discuss in different part, actually in four part. First we will see criteria or characteristic of formation of a Marubozu candle. Then we will see psychology or thought process behind this formation. And then we will have our trading setup based on these informations and ultimately this risk management or stop losses. So first of all, let us understand what is Marubozu candle and how it from the photograph you can see this is a Marubozu candle. When opening price is lower than closing price, one thing. Second thing, there should not be any wick upside or downside, any significant wick. Third thing is that market may move in between during the period or daytime, but ultimately closes without making any wick or this opening price is sacrosanct. Beyond that, market does not move. Maybe in upper direction or lower direction. When it will be in upper direction, uptrend that very period or that very day, this will be bullish Marubozu. Just opposite of that, this is a bearish Marubozu. Here you can see there is no significant or there is no shadow or wick. Same thing upside, there is no wick or upper shadow. So this market opened at this point and there is no movement beyond that. So we can see here this point. Beyond this point, market does not go. And same time, upside also, market does not move. Here also we can see this closing price is sacrosanct. Same way here, this market opened this higher price, and beyond that, market does not go upside and continue downwards journey. And whatever the last price loses there. If such thing is happening, that means this is the formation of a Marubozu candle. Now, second thing, what is the psychology behind this formation? The psychology is simple. The trader or investor, whosoever or the market participants is in first case too much bullish about that very candlestick or too much bullish during that very period. Or if we are taking this day, that means here at low price, at this price, he started to investment and full day, all participants continue to push the script for this very stock or market upward journey only till it reaches to certain level and does not go upside and then backward. In daytime, maybe it has different uh, travel upside or downside, but ultimately closes at higher level. Just opposite of that here, market opens and going downward, maybe some recovery in between in during that period or that day, but ultimately closes at lower price. So this is the formation and psychology behind this. So here bulls are so much impactful or influences the market that it does not allow the bear to enter and full control by bulls. Here in opposite case, bears are in full control and bulls are not able to market and make significant movement or upward journey. So whenever this happens, what will happen then? So whenever this happens, that means it has the potential to reverse the direction of the trade because now bulls are in full control and bears are out of market or insignificant. Here in second case, bears are in full control and bulls are out of market or insignificant. So this formation happens. Now, what we can have our trading setup. When we see this formation by the end of the period, or if we are seeing the day candle, then by end of the day, market closes at 3:30. So we can have our trading around 3:15 or 3:20 for risk takers. Risk averse will see their candlestick formation at night only. And next day, when they see this market is moving in the same upward direction, then he will take the trade. But stop loss for both will be lower of that one, the open price of next this previous day. In the case of risk averse or for risk takers also, this lowest price will be the stop loss. Just opposite of that. This is possible in shorting case only in derivatives. So if someone shorts here, then no, actually he will short here downside and it will continue downward journey. If trade does not go in favor, he can have a stop loss at this point. So this is the trading setup and stop loss. Let us have some example. Here from Sakar, we have taken some significant good examples. Here we see market in uptrend. Then this bearish candle appears. And once this bearish candle appears, here we see this bearish candle appears and then market moves downward. Again, we can see here bullish candle formation and after some downtrend, and then we can see upward journey. Again, this happening going downward and from again this is going upward. Here, this again bearish candle and downward journey continues. So this is the thing. Now again we see another example. Here we can see there is some downtrend and then bullish Marubozu formation happen and we can see some 4-5 day in upward journey. Again, there is upward journey after sideways and then we can see significant downward happening slowly. Another example is here. We can see upward journey, then big bearish candle, bearish Marubozu candle appears, and then downward journey happens. Again, this bullish Marubozu candle appears, formation happened, and we can see significant upward journey. Again, we can see here upward, same from I think, and then this bearish Marubozu appears and downward journey started from country foods. Here we can see there is a downward journey and then Marubozu candle appears and then there is upward journey. Again, this bearish Marubozu formation happened and there is a downward journey. Of course, it is not so significant, but there is of course downward journey. Now again, we can see some failed situation. Here, upward, then bearish Marubozu appears and then downward journey. Here, bullish Marubozu appears. It went up only one day and then significant downward. It should go upward, but this does not happen. So this is a failed case. Again here, after downward, this appears for only one day. It goes up and then again going down. Here, this bullish Marubozu appears. There is some upward movement and then downfall. Here, bullish Marubozu appears and downward journey is there. So here we see some failed case of Marubozu. Actually, whenever this Marubozu formation happens, there is great chance to go opposite. It has potential to reverse market, but there are so many forces acting on the market. So it may fail. We should be flexible with our trading setup as per rule number 2. We have discussed in earlier video 3 rules. First, we should buy a strength. Of course, this is showing buy a strength. Second thing, be flexible with our setup, quantify and verify. So whenever this goes reverse, does not go in our favor, we should have our stop loss and exit. So these are the examples. Let us have some live examples and see. So same thing we have taken here from Saka. Here you can see significant movement and going down. Then bullish Marubozu going up. Then downward journey happens. And again, this bearish Marubozu downward journey happening. We have taken from Saka. Now let us see some NDTV. Here we can see there is upward journey. Then this bearish Marubozu appear and then downward journey. Again, this went up. But second time this bearish Marubozu formation happened and it is going down. We see so many this after some uptrend. This bearish Marubozu then going down, bearish Marubozu going down. So we can see so many examples here. Whenever this appears, it goes. We can see here bullish. Of course, it will goes only couple of days and then reversal happens. So we should be flexible with our setup. Now let us see Patanjali Foods. So here you can clearly see this upward journey, this bearish Marubozu formation happened, and then it is going downward, bullish Marubozu and going up. Again, after this big uptrend, this appears bearish Marubozu and there is downtrend. Of course, after this bullish Marubozu formation, it does not go only for one day. Again, this failed. So we have taken some failed example. Again, we can see some 3 4 days it is going up and then downward. So it okay. But here this clearly failed, this clearly fell, here clearly fell. So we should be flexible with our trading. If it goes in our favor, we should continue. If it does not go, we should exit from that very trade. Another one thing is that whenever this formation happened in continuation of the journey, then what we can do, whether we should exit or continue. Let us have some example here. We can see here there is upward journey and this Marubozu, bullish Marubozu appears and then it continues. So whenever we see in same direction bullish Marubozu appearing, then it reinforces and it will continue the journey either bull side or bear side. It may be any side. So we should be aware of this fact. After downtrend, when it appears, it will go upward, this bullish Marubozu. But in continuation of the trend, when there is a continuation of trend, then it will continue further. So we should be aware of this fact. So up to now, what we learn from this Marubozu? First thing, it is known as bald or close crop because there is no weak upside or downside. Whenever we see such formation, it is Marubozu. Second thing, it is a single candlestick and it has the potential to change the dynamics of market. Third thing, we should be flexible with our trading setup. Whenever it does not go in our favor, we should exit. If it goes in our favor, we will continue. Another thing is that there is chances of some failure. Maximum 65 to 70% chances is to go in our favor. So we should be aware of that. Another one thing I would like to show you that like this formation can happen. Here, I would like to explain one thing more. If you can see here, a small candlestick, a small wick formation upside, and here downside. So what is this? This is Marubozu or no? Of course, this is a Marubozu only, but there is slight difference. Here, market opens at this price and goes up, and by the end of the session, there is little bit recovery and closes. So upside wick will be very small, not significant one. And just opposite of that, in the case of bearish Marubozu, market opens here and going down, 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 and at the end of the session, there is little bit recovery and then closes. So this is known as bullish Marubozu open because this upside is open. It is chances of going upward. Here downside is open and chances of going the stock price for the market downward. So it is known as Marubozu open. Just opposite of that. Here we see market opened here goes up and closes. But in the daytime, it goes little bit downside and then continue. So this open side is closed. Full day bull is in control and pushes the market upside. Just opposite of that, market opens here and going little bit upside and then going down and closes. So this upward journey is closed. Here downward journey is closed. That is why it is known as bullish Marubozu closed. And this one bearish Marubozu closed. So this is the information. Little bit changes. We should be aware of that. So this is all from today's session. Tomorrow we will see another candlestick. If you find some value in this discussion, please do like or share with your friends and colleagues so that they can also get benefit of this knowledge. If you have any comment, please do write in comment box.